morning. You're watching Business World Live. I'm Danie Laurel. It's the start of a new trading day, but first let's go straight to our top story. Infrastructure spending and other capital outlays declined by 50% to 40 billion pesos in November. That's from more than 80 billion pesos 1 year ago. Infrastructure spending for that month was down by nearly 30% from 57 billion pesos in October, marking the fifth straight month of a year-on-year decline. The Budget Department expects line departments to have caught up on spending in December, particularly the biggest agencies, DPWH and the DOTR. ANZ research said the government needed to maintain a supportive fiscal policy over the next 2 years to support growth. It said the country needs to address underspending, especially for the infrastructure, to realize potential gains of the budget. Okay, guys, so kicking off the market report with a quick check of our local unit. You can see on my Bloomberg terminal here how we seem to be not necessarily doing very well, at least compared to our Asian peers. When it comes to the year-to-date Asian basket, you can see that we are the fifth performer, but we are actually declining by negative 0.04%. And that compares, of course, to how we fared in 2020, which was one of the star performers last year. But I'll take out the chart for you guys so you can see how we are performing. Bloomberg, however, does believe that we might be breaching the 48 per dollar mark here. We're actually inching in towards that. We are strengthening a touch this morning. And what is driving this, though, is not necessarily a good news from the economic front. They're saying that it's because of the trade deficit, which has shrunk dramatically because of the tepid economic recovery. Now, recall that imports had dropped a 19th consecutive month last November, and the trade deficit had narrowed by more than 50% to $1.7 billion a year ago. So the good news there in terms of that is simply a gain in the peso. We're still the strongest in 4 years, albeit, as I mentioned, weakening compared to our Asian peers as of 2021. But Bloomberg does say we might be testing 46.24 to the greenback. Now, let's take a quick step back and look at the global markets this morning. That's, of course, as we are awaiting the inauguration of President-elect Joe Biden today over in the U.S. So that's going to be evening time here in the Philippines. President Donald Trump has given already his speech. He's in his final hours of his term, and Biden is to be sworn at noon time in Washington. Meanwhile, take a look at the NASDAQ that jumped by 1.5% yesterday, and you've also got the S&P 500 up by 0.8% as well. Now, another thing that I wanted to focus on is Asia, and taking a quick peek at how that has performed. It's just been a very mixed picture, so to speak, this entire week. We've seen gains, we've seen losses, and we do seem to be opening this hump day on the back foot, at least when it comes to the Asian stocks. The Nikkei 225 down by 0.5% this morning, but it's very mixed. In Taiwan, for instance, that's up by 0.5%, and South Korea, again, two diverging paths here, with the Kospi opening in the green and the Kosdaq opening the Kospi opening in the red and the Kosdaq opening in the green. Now, let's take a look at our own local stocks. One good news, though, to be celebrating, so to speak, is our Bangko Sentral chief. He has been set for discharge. That's after his surgery. He said himself that he is recovering fast and he is to be leaving the hospital on Wednesday. This is, of course, just in time for the next policy meeting of the central bank. That's on February 11. Now, you can see, however, on my terminal that our stocks are down at the open. We are still below the 7,200 levels. We had dropped below that level yesterday. We still seem to be on the declining path, down by 0.8%. Now, this, according to Phil Stocks' Claire Alviar, she mentions that the overvaluation in the index is pushing traders to look at stocks that are outside of the index, where there's more positive sentiment. The good news, though, is that the value turnovers were higher. We reached 16 billion pesos worth of trades yesterday. However, net foreign selling persisting. And this, according to Bloomberg analysis, that net foreign selling, I'll just pull out the chart for you guys, but that net foreign selling has accelerated to $8.83 million. That's compared with the 20-day average of $7.56 million. I'll take a quick peek at some stocks to be watching out for here. First of all, let's take a quick peek at the telcos. This is good news, as you know, we've all been working from home, but PLDT has now actually said that their speeds, okay, broadband speeds at least, and download speeds are up by more than 70% compared to 2017. So that actually means that broadband speeds, download speeds, are at 32.20 Mbps, whereas when it comes to the mobile download speeds, that's at 17.82 Mbps. Now, meanwhile, you've also got Globe looking into tapping into the BPO market. So they actually have a subsidiary of Globe Telecom that's called ASTI Business Services. That's a shared services company that has already around 1,000 workers. They're hoping to break into the shared services mark, and they're looking to generate 500 million pesos annually. That's okay, providing enterprise services not just to telcos but financial technology, IT, retail, real estate, to name a few. Now you can see PLDT actually enjoying a bit of a bump up this morning, together with Globe, which is also enjoying 0.1% gain. And finally, just a quick peek on our financials here. This, as the bicameral conference has now approved the stricter dirty money rule, so to speak. So this is, of course, with regards to the AMLA, so the Anti-Money Laundering Act, which they needed to do to comply with the Financial Task Force, which might put us on the gray list if we don't comply by February 1st. That has now been approved. It was certified as urgent as well. So what are the new concessions here? A key amendment pushed by Malacanang was actually not included in the final version. So the House has now agreed to adopt the Senate's proposal. The tax crime threshold will now be in excess of 25 million pesos instead of the original 20 million pesos in the Senate version. Another thing, they were requiring reports of real estate transactions. That's now going to be for transactions in excess of 7.5 million pesos compared to the original plan, which was 5 million, and even very, very initially 1 million pesos. You can see financials down, however, by more than 1% at the open. Now, here to discuss all of these developments and more, we have with us this morning Tina Ulang. She's the head of research of First Metro Investments. Good morning, Tina.
Hi, good morning. Hi, good morning, Danie.
Christina, so good to have you back here. Okay, let's take a step back and talk global. We want your broader assessment of the general recovery that we are seeing. You know, a lot of vaccine developments on the one hand, a lot, however, of lockdowns that are reappearing, but also a rally when it comes to stocks globally. What's really going on? What's the sentiment in terms of a 2021 recovery?
I think although the realities on the ground point to still an uncontained virus, although we already have the vaccine, mass vaccination happening, is that the market is focusing on more on the stimulus. I think the need for more stimulus is being indicated in the US. This Miss Yellen is very bullish and has indicated that there's a need to further expand the stimulus, so that but it's going to be very targeted, and that's really to address this scarring on the economy, and that is a very bullish signal for the market, and therefore the global recovery is going to be precipitated by that. That's going to be the trigger, that's going to be the catalyst. In the EU and in China, the stimulus packages are also very strong, very big in EU, almost $1 trillion US, and in China 1.5 trillion US dollars. So if the US is going to lead with some 2 trillion, add to that the statements coming directly from the new administration, the Biden administration, then you see a scenario where the sentiment is really risk on and very bullish. And so the market is pricing that in right now, although there is still this uncontained virus and the vaccination is still ongoing.
Ms. Tina, does the Biden administration have a positive effect when it comes to the Philippine economy and our market performance? It's a bit of a mixed bag here, with him still having a strong stance towards China. But as you mentioned, the stimulus might be higher, but also there might also be higher taxes. So can you relate that vis-a-vis our own economy?
Mhm. First of all, the thing to look into is the supply chain. We are very much part of the Asia supply chain. We're a big exporter of semiconductor. It's really the locomotive of our exports, and China is also an increasingly bigger direct investor in the country, and therefore the relationship in trade and investment revolves around China, and the war is happening between China and the U.S., and the change in the administration in the U.S. with Biden as the president means that the process will change. If Trump has been very confrontational and very retaliatory, very tough on China, I think the process will change into a framework that is more multilateral. It's not a unilateral. It's going to be toned down in terms of the approach. It's not going to be combative and confrontational. It's going to be consensus driven. It's still America first, and a tariff is still there. But the tone and the degree of the tension is going to be a bit tempered because the approach and the process has changed. It's going to be multilateral. It's not going to be unilateral and just one man saying and dictating everything. And the thing to look out for is that how that is going to affect the supply chain. If and of course that the dollar policy is very important. Also, as Yellen has said, she's not going to be giving the dollar a competitive advantage or an undue advantage. So that means that the dollar may continue to weaken. We're not seeing a strong dollar immediately, and that's positive for the exports here in Asia.
Okay, so there's actually some bright spots there to be had. Ms. Tina, why is this risk on sentiment that we're seeing in U.S. stocks, at least, not spilling over into net foreign buying for emerging markets?
Last year, what we've seen is that in spite of our very strong fiscal stimulus and our reform agenda, the foreigners were not really that fast. There were pockets and there were intermittent episodes of buying, but it's not really a sustained one. And we're seeing the same pattern here because foreign money is still trying to observe. There's been a change, a big political change in the U.S. in terms of the policy. It's just evolving. So to commit to a greater degree at this point in time is not too intelligent a decision. So there's still that uncertainty when it comes to the policy. The smart money must be convinced that everything is going to be up to expectation in as far as the policy pronouncement is concerned. So there will be a lag time when we see the money coming into Asia.
Okay, and finally, ma'am, let's talk about our own index levels here and your view of a recovery. Fourth quarter earnings are coming up. What's your expectation on that, and how is that going to color the market performance, at least in the short term?
In the 9 months of last year, we've seen our earnings contract by negative 53%. So that contraction is going to ease. In the first half, that was negative 80%. So in the 9 months, it has eased and will continue to ease in the fourth quarter. But that doesn't mean to say that the entire year of 2020 is going to be better than 2019 because really we're in the negative territory as far as the GDP is concerned, and therefore corporate earnings is going to be related to that. But the fourth quarter would be the beginning of the easing of the contraction, and hopefully in the first quarter we would see some improvement.
Okay, so hoping for that improvement also to be spilling over into our market performance from a fundamental perspective. Thank you so much for those insights. That was, of course, Ms. Tina Ulang from First Metro Investments. Thank you, ma'am.
Sure. Thank you. Bye.
Checking in on the headlines we're keeping our eyes on, Citigroup is expecting the Philippines' post-pandemic economic recovery to be slower than its peers in the region. Johanna Chua, Managing Director and Head of Asia Pacific Economy at Citigroup, says it would take the Philippines until 2022 to return from pre-COVID levels. To compare, Chua says Indonesia bounced back earlier because it did not impair mobility as much as the Philippines, which imposed a much harsher lockdown. Recovery is also expected to go much faster in Malaysia since it is more tied to the global trade cycle in terms of goods, while the Philippines is a lot more dependent on services and service sector employment. She added although Thailand's economic recovery would be challenging because of their conservative fiscal support measures, it would still be faster than that of the Philippines. The Citigroup representative says it does not help that the country is also lagging the rest of Southeast Asia in terms of its COVID-19 vaccine procurement. NEDA is targeting to complete the draft list of industries restricted to foreign investment by the second half of 2021. Now, this comes after its regular release date was pushed back by the pandemic. However, Acting Secretary Carl Chua said they are still reviewing if the upcoming list will be less restrictive to foreign investors. He added that there are limits to the FINL since the key legislations need to be passed, like the Public Service Act, Retail Trade Liberalization, and the Foreign Investment Act amendments. Foreign investors are hoping the administration will liberalize more sectors in the list. That's to raise business sentiment and improve recovery prospects. Now, the House Committee on Labor and Employment has approved in principle the bill that will grant paid leave workers who contracted COVID-19. This was confirmed by one Pacman representative Enrico Pineda during Tuesday's hearing. The paid pandemic leave bill seeks to provide a 14-day paid leave to workers infected with COVID-19 and other emerging infectious diseases. Suspect cases and those exposed to a confirmed COVID patient would also be covered. Now, if this bill gets enacted, those who were involuntarily rendered out of work or placed under floating status may also avail of a 60-day pandemic leave. Although lawmakers resolved to grant only the basic pay of regular workers instead of both basic pay and other benefits as stated in the initial proposal. Employers who would fail to comply with the law will have to pay a fine from 20,000 to 200,000 pesos. And that's a first look into the business day. Today's Wednesday, January 20, 2021. Catch Business World live for the market closes at 3:15 p.m. today. I'm Danie Laurel and we are One News.